Right. What is also at issue today for a lot of market watchers is shares of Yahoo. The shares are trading a little bit lower this morning after the internet search company reported a decline in their third quarter profits. Let's talk to the CFO about this quarter. Sue Decker is joining us from Yahoo's headquarters in Sunnyvale, California. And Ms. Decker, thank you very much for being with us. And let's start off talking about this quarter and the decline that we saw in the last 3 months. Tell us a little bit about what you saw.
Sure. It's my pleasure to be here. Thank you for having me. We had a solid quarter overall, up 20% in revenue and 23% in operating cash flow, but it was not as strong as we had originally thought 3 months ago. We had expected an even stronger quarter than we had, and saw a couple of things that took a little bit of the heat off growth. Still very positive, but not quite as strong as we had hoped.
Could you tell us a little more information about what some of those things were?
Yeah, in the first half of the year, we had extraordinary growth in our graphical brand business, significantly outperforming the market. And as we got into the second half, a couple things happened. One is that some very client-specific issues affected their budgets in Q3. A little bit of the heat came off the growth, still up a lot, but not at the rate that they were in the first half. And then secondarily, there's been an enormous amount of new inventory coming into the market. It's actually a fairly exciting time with lots of new social media networks sprouting up, many that we are either own or have developed as well. But that new inventory is creating a little bit of a transition and has tempered our growth expectations for the back half.
The clients that you had discussed, is it one client, is it several clients that is expecting or that is kind of reducing their expectations and reducing their sales?
It was really a handful of clients in industries and areas that you might expect based on some specific financial pressure. I think it's important to note they're up very, very strongly in an absolute sense, just probably not up as much as they were in the first half when growth of the U.S. graphical business was north of 40% year over year.
And again, I'll take you back to your statement when you said there's this enormous amount of new inventory that's coming on and that's tempering your growth expectations. Could you expound a little bit more on that?
Sure. This is a tremendously exciting time in the internet because there are all sorts of new and innovative companies coming forward. We at Yahoo have also acquired one and launched one in this broader area called social media. Answers which is a Yahoo property that we launched, has 60 million users in just a year globally, which is an astonishing number to think about. Flickr, which we acquired a year ago, which allows sort of citizen journalism of photos all over the world. We acquired with 2 million users. It now has 20 million users. And there are others as well, the Facebooks, the YouTubes, MySpaces of the world, that have emerged as a way that consumers can express themselves. And consumers create the inventory. So with a lot of new inventory out there, that's created a little bit of a supply and demand change in the marketplace. A lot of the advertisers trying to reach those audiences are trying to figure out how to best do that. And a lot of the folks that are selling the inventory are figuring out the best way to sell it in a contextually relevant and personalized way. We actually feel like we have a wonderful position in that, but there's probably a little bit of a transition in the near term.
Is a transition another word basically for saying companies like MySpace or YouTube or Facebook.com that to some extent that they are cutting into your business?
You know, what we're seeing more than that is that we're seeing some inventory changes on our own site, where we're seeing the fastest growth in page views with some of the less monetizable areas. All of these are not very monetizable today. Why is that? It's very difficult for advertisers to place a relevant ad in a social media site because it's very hard to know what the user's interested in. In Yahoo's case, we have very contextually relevant places to put it. We have extraordinary targeting capability, behavioral algorithms and demographic information, and we have a user registration information. So we actually feel extraordinarily well positioned to be able to deliver the best and most relevant ads to those consumers. But it's early days, and there's going to be a lot of experimentation out there with advertisers trying a lot of different sites.
So then what can you do if you've got, as you mentioned, this enormous amount of inventory that's coming on, this competition that's coming on? What is it that Yahoo can do? Is it continue to be acquisition of companies that are in those particular spaces?
We're going to really focus on our main game, which is to offer the best and most valuable advertising products and services to these various advertisers. Part of that is acquisition. We had announced 2 acquisitions yesterday, actually one investment in a company called Right Media, which is an advertising exchange with some of this new kind of inventory. We also bought Ad Interacts, which is a rich media ad site, which helps us provide very, very engaging ads to our top marketers. So we continue to move down the acquisition front. We're also very much moving down the audience front. I mentioned Flickr, mentioned Answers, certainly in video. We've had enormous success over the last year. These are all new and engaging areas of audience, and that's what we're trying to offer our advertisers. So we believe we have the audience, we have the tools, and we have the sales capabilities to really take advantage of this.
All right, Ms. Decker, thank you very much. We always appreciate your time with us.
Thank you.
Yahoo CFO Sue Decker coming to us from Sunnyvale, California headquarters, talking about the company's latest earnings. Shares of Yahoo are down 60 cents so far this morning.